Hi everybody, Brian from Bearable Traders here. It is the Memorial Day long weekend, May 27th. Hope everyone's having a great long weekend, family and friends. So this is of course the weekend video. We'll take a look at what happened last week with all the earnings that came out, Nvidia, Marvell kind of stuff. And then we'll look ahead and see what we got coming up here in the shortened trading week. We've still got some retailers that are going to be reporting and some more tech companies. So another interesting week on deck. Let's get down to it. All right, so let's take a look at what happened last week really quickly here. Earnings releases from Nvidia and Marvell. Couldn't miss those if you were watching the markets this week. Huge moves on both of them. And based on their reporting strong results, stronger than expected, and the positive guidance specifically on the AI sector, which is, of course, what's driving a lot of these stocks higher right now. This hot sector mania trade is AI, apparently. If you read about that in my book. So this week's read on the economy, it still showed inflation is a challenge for the Fed. We had a price index, PCE price index, that came in higher than expected or hoped. And so inflation still persistent. And the job market just continues to show strength. The jobless claims were lower than what was expected, and of course that just means people are still getting jobs. So again, inflation still a challenge for the Fed to get down. So you can see what happened with the major indexes this week. Qs were obviously the big leaders. The Dow, which was sort of these value stocks, we actually ended up down on the week. 1%. So still money, you see more money's rotating. Technology, communication services, again, this was the biggest sector for gainers last week, continues this week. And utilities and energy, the biggest losers on the week. I think it was utilities and real estate last week. So again, money rotating out of sort of these some sectors and rotating into others. You always have to be cognizant of that if you're doing swing trading, especially. The two-year treasury, again, creeping up here with those the signs that inflation still isn't under control. And the 10-year was up as well. And US dollar, up again on the week, and of course it's being driven up by these interest rates that are going higher as well. And of course that's not great for, especially for the gold and silver trades, stuff like commodities, which are struggling right now. Bitcoin, really no significant change on the week. We're still trading in this 26,700 level. And that's kind of the wrap for how things ended the week. Okay, and before we get into the charts, as always, like to do a quick little plug here for my book on Amazon, Profiting as an Active Trader. You can see there, go over money management rules, strategies, and the routines of an active stock, and even cover some options in that book as well. So you can check it out. It's there on Amazon. So let's start taking a look at some charts here. And as always, start with a 2-year and 10-year, mentioned already. They creeped up a bit this week, sort of breaking out of this range. And again, this inflation being very persistent this week. And as soon as some of those numbers came out, people anticipating, bond and treasury market anticipating maybe rates are going to have to continue to go higher. But certainly some of the stuff that was being talked about earlier about possibility of at the end of the year interest rates might start to drop them. I think that's pretty much off the table now. And you can see here in the 10-year as well, we'd end up creeping back up, and we're getting back up to that 4% level, which has been which was resistance back here in early March. So keeping an eye on that, but I'm expecting there's going to be a continued challenge to get inflation under control. The transports, again, not much of a week here. Transports are still sort of signaling a bit of a recession. And you can see here we're still in this downtrend, still trying to hold on to support here. But again, transport's always an indicator of economic activity. Stuff getting moved, and when stuff doesn't get moved, generally that means that economy's slowing or sluggish. So keeping an eye on transports. The Dow had a good day Friday, but you can see here pretty much all the week we sold off, and we've been really on a downtrend here in the Dow as money's come out of these so-called value stocks and gone into into the tech trade here. So kind of see we're still in a bit of a downtrend on the Dow, although we're kind of holding on here to this area of support, which we came down and tested this week, 32,600 roughly. The Qs, again, this is where the money's flowing. It's all about knowing where money's flowing. And Qs taken off here. You can see here momentum building. Volume's been great. Stochastics still up in the and showing lots of strength here, and just looks like it's going to continue to move higher. On a weekly, we are just making some strong moves here, getting pretty extended from these moving averages. So, we could be getting into some pretty overbought areas here if we do get up to this sort of 358, 360 area. That should be an area where there should be some resistance if we can continue to push next week. But you can see here what happens after we get 3 big move days. We generally get either a consolidation, or here's a 4-day or a 4-week move and then some pullback. So anyway, it is getting pretty extended. That's what I'm trying to say here. SPY right up at this prior high from middle of May, and you can see here we're just flirting with this breakout area, 420, 421, Elon's favorite number. And the IWM, again, we're range bound here. It seemed to be a story of this tape here. This 180 area is resistance, and this sort of 170 area is support, and we're kind of right in the middle of it right now. Of course, small caps, ones that are probably most challenged in an environment where it's recessionary or economy slowing. And of course, they do also have a lot of these regional banks, which there is still some thought that maybe the final shoe hasn't dropped yet. So a little bit of nervousness there. So you can see here really indecision candle on the week as we hang in there. Volatility really creeped up here this week, over the week. Came back on Friday as we had that nice run up. The dollar has really just screamed higher, and of course that's created a real challenge and a rollover for gold and silver. People have been in that trade are feeling the pain on that because of dollar strength. And you can see here we are breaking out on this weekly level here. This is the UUP. Volume not really confirming this breakout yet, but momentum indicators all pointing to a move higher as interest rates go higher and the dollar continues to get more attractive on the international markets. Bitcoin, again, really Bitcoin's just struggling here. It's kind of a bit of a head and shoulders pattern here. Here's your shoulder, here's your head, here's your other shoulder, and we're right down at the neckline here at sort of 27,000 and flirting a little bit below it. But watch out if it breaks. 25,000 would be the next area where it could end up going. And as far as stocks on watch go, if you're going to be long, just stick with the winners until they tell you they're no longer winners. You can see here Apple just continuing to push higher, this 175 level. It's had trouble getting through before, but it just pullbacks get bought, and as long as that's still the trend is your friend. And there's the weekly. We are getting a little toppy here. We are up into a pretty significant area of resistance, so expect Apple to do a little more consolidation here next week. Here's another one that's playing here this week and still have some. And they are reporting next week, so that's going to make me a little bit nervous to hold into the report. But you can see here volume building on this breakout. Really nice move through 30, so holding some AI as a hot sector mania trade. Anything semiconductor related. Here's Applied Materials breaking out here. I was looking at this last week. I didn't get into it, unfortunately, but again, just about anything with related to AI and semiconductors seem to be on fire here. And you can see here Amazon, again, this is an AI play breaking out. Another nice move there. This was an ETF I had on watch last week. We did get a bit of a pullback during the week, and then we actually broke out on Friday. Normally, emerging markets don't do well in a rising rising dollar, US dollar environment, but because it's sort of an inverse correlation, but this is emerging markets are breaking out here. Google, again, an AI trade, a good one to stick with as well, although we are pretty extended and probably need some consolidation and backing and filling here. Netflix, a really nice breakout here. We had a bit of a pullback early in the week, held the 360 level, 355 level, and then punched up to a new high here. So could be heading higher on Netflix. And here's your weekly. This 400 level is your 200-day moving average, 404. There's probably going to be some resistance at that level. But Netflix implementing their new pricing strategy, and people are liking that. Nike is really just after the Foot Locker report and their own report. I mean, it's just getting destroyed here. So I'm thinking probably $100 on Nike could go to. Here's NVIDIA, obviously nice play. I think it's going to go to 400 next week. It is pretty extended. Perion, I was watching, it came up and touched, again, this trend line and pulled back. So if it can hold 30, I think that could be a good long. Tesla, I said this week 190 and then 200, and we got 198.60 was the high. So another buck. I guess I missed out on it by $1.40, but I was right on the 190 as we pushed through there on Tesla. XRT, mentioned that last week as well, breaking down. Good short there because the consumer seems to be a little bit strained here, only buying and paying for goods that they actually need, like food and shelter stuff, rather than other expensive items. And I'm still holding on to some Zion Bank here. It is sort of holding this moving average, so just sitting on a small number of shares. I really partialed out a lot since I got back in here last week or two, and pretty happy with that trade as a reversal here. But we're into an area where there's a lot of congestion, so we're going to have to do a lot of backing and filling here before we break out through this sort of, say, 31 level. And if it does, I may got an alert set, and if it does break out, I'll be maybe adding back to that position again. So that's it. Okay, so wrapping things up here, the Dow, you can see where the levels are at right now. We're pretty close to a support level on the Dow. The Qs on the verge, well, they did break out last week, and on the verge of continuing to break out with these 350 and 360 levels. SPY right up at a breakout range as well. And IWM still sort of sitting in the middle of the range here. As far as economic events this week, obviously we got Monday the holiday. We do have some home price index and consumer confidence Tuesday, ADP number. That'll be an interesting number to watch on Wednesday. Employment just continuing to show strength probably. The usual jobless claims Thursday, which people are focused on right now. And ISM manufacturing construction spending, and then we got some employment report and hourly wages coming up on Friday. Again, this will be some numbers that people will definitely be watching. So earnings coming up this week, HPQ, Ambarella, and we've got, interestingly, on Wednesday, Capri, which is a lot of high-end retail stuff. That'll be interesting to see if high-end consumers holding up. We've got Crowd, AI, CRM, much anticipated, and retailer, you can see there. And then another couple of retailers on Thursday, Macy's and Dollar General. And then, of course, Broadcom and another sort of higher-end retailer, Lulu, will be interesting to see what happens. And yeah, Zscaler, Dell, yeah. So it'll be kind of another interesting week of earnings as we get into Wednesday and Thursday. Nothing much on Friday. So that's it, everybody. Hope you are enjoying, as I said, your Memorial Day long weekend. Join us on Tuesday morning. We'll be back in the room at 8 o'clock, engineering the markets, and then pre-market show right up to the open, and then we can trade with us if you're a member at 9:30. So hopefully we will see you there safe and sound on Tuesday morning. Bye for now.